Well, hi there, Shaun Humphries here. Welcome to All Things Retirement. In this installment, we're going to talk about stock investing. This is actually part of a series of videos that we're creating to deal with this very important topic. Why is this important? Because a lot of people don't understand how the stock market works, and it gets in the way of them achieving the returns that they're aspiring to in their portfolios. And stock investing is critical to long-term retirement income planning success. For most investors, most retirees, to maintain purchasing power and cope with inflation, they likely need to have some exposure to the stock market. So you'll enjoy this series of videos. Now, if you're new to this channel, make sure you hit the subscribe button. We're posting content all the time, quite frankly, on all things retirement. Whether you're in the runway phase, just about to retire, whether you're already retired, you'll find the content helpful. So make sure you hit that subscribe button so you don't miss any of our content. Now, we're going to talk about stock investing, sometimes referred to as stocks, equity, growth investments. There's a lot of terms that get thrown around, but essentially we're going to unpack what stock investing is, some of the things that get in the way of us accomplishing our goals when it comes to our portfolios, particularly in the area of stock investing, and then some strategies to successfully invest in equity, stocks, or growth investments over time. Now, the first thing that I want to do is sort of talk about an issue that's extremely important, and in this installment we're going to talk about some of the realities around stock investing and start talking about these important areas that can get in the way of successful investing. The first thing is you need to make sure that when you build your portfolio, you are focusing on your specific returns that you need to get to accomplish your goals. So investing is not something where you just throw the dart at the dartboard and hope that you get your returns. There's a methodology and process, and that process always needs to be linked up with your plan and your forecasting about where are your buckets of assets, what do you need to be doing to generate the income that you need, and that's going to inform what kind of returns you need to get on your portfolio. That's this green star. It's basically your return. Doesn't matter what the S&P 500 did, or gold, or silver, or commodities, whatever. Those are not unimportant things, but the most important thing is what is your number, and are you tracking in the direction of your number for the least amount of return? The reality is many people need to have stocks, growth, or equity in their portfolio to achieve their long-term performance numbers. Now, one of the reasons for that, and we've talked about this in other videos, is the fact that interest rates are so very low. If you look at this chart on the left-hand side, you can see that interest rates were, very high in the early 80s. There was a lot of inflationary pressures. And back at that time, if you had, basically $155,000 of capital, you could generate about $25,000 a year of income. It's incredible. And so the interest rates are denoted by the green line that tracks across the chart from left to right. And you can see how interest rates fell precipitously over that time period. So much so, this chart goes to 2014. To generate that same $25,000 a year of interest income, you needed $1.2 million in capital to generate the same spin-off in income. If you look at the blue kind of mountain chart behind that green line, that's the amount of capital you needed in any given year from basically the early 80s right through to 2014 to generate that $25,000 per year, let's say from a GIC. Now, that is the big dilemma for retirees. So when interest rates were higher, a lot of retirees would listen to the general recommendation, which was take your age, right? So 100 minus your age. So let's say you're 65. That's how much you have in equities. So if I'm 65, the most that I should have in stocks is, let's say, 35%. Now that worked well when interest rate environment was higher. It doesn't work so well when interest rates are so low. It wasn't that long ago when we were preparing for this video that 10-year government bond rates were under 1% a year. So those incredibly low interest rates and the low interest rate cycle we've been in for a long time has meant that we have to begin embracing other alternative assets like stocks to grow the total return on our portfolio so we don't outlive our capital and so that we can cope with inflation more effectively. The problem with that is that when people think about the stock market, this is kind of the analogy or the image that comes to mind. You see this person on the volatility tightrope. They've got the umbrella, they've got lightning, there's rain. It just seems like a really scary place. And there's no doubt that in the short term, there can be volatility in events that make it feel a little bit scary. But we're going to cover in the series of videos strategies to reduce the risk or to cope with the risk more effectively. Now, part of that is just good basic education, which we'll be covering off some really good background content. So whether you're an expert or a novice to this area, I think it's always important to remind ourselves of the basics, the fundamentals to be successful when it comes to our stock portfolio. So we talked about why stocks are important components in your portfolio, or stock proxies. What we mean by stock proxies is essentially, rather than buying individual stocks, we could buy what are called exchange-traded funds, which we'll talk about in this series, which give you exposure to the stock market by buying a basket of stocks for you. Traditional mutual funds that buy stocks would be another proxy or a way of accessing the stock market without you buying individual stocks on your own. So we need assets in our portfolio that have growth potential. What gets in our way is our fear, our concern, our anxiety about the stock market. And the media does a really good job of painting the negatives, but doesn't talk very much about the positives. So the other issue that gets in the way of successful equity investing is that, this roulette table, this gaming table, the stock market seems to be like the casino, like gambling, like it's rigged somehow. Now, there's always stories in the media that, kind of support that impression at times. But the broad markets are not a gambling house. It's not a casino. There are certain fundamentals that drive valuations on companies over time. And we've got lots of decades under our belt to know what those metrics are. What drives share prices over time? And we'll talk about some of the main factors that do that as part of this presentation. So we need to get away from the stock market's a really scary place and it's just like gambling. Those are not truisms. Yeah, things can be volatile in the short term, there's no doubt about that. But if you play the high probability game, there are laws of averages that we can get working in our favor, so we accomplish and have a high probability of accomplishing the long-term return objectives we're trying to achieve with our stock portfolio. The other thing that gets in the way is just where we get information. You can't think of any other area of life, if you want to become an expert in it, where there isn't study and accreditations and just lots of research that needs to be going into it. There is methodology to successful investing. Unfortunately, people are getting little bits and pieces of information from family or their school or the TV, friends. Internet's a great one, books, radio, and they're fragments. And often they're either selling something or they've got a certain perspective, and you're not getting a holistic picture. So what we're going to try to do through this series of videos is to give you a more holistic picture about stock investing, what are the real risks, how do we navigate around those risks, and how do we be successful over time with our stock or growth or equity portfolio. Well, I hope you enjoyed this introductory video. We're really excited to walk through this series of videos on successful stock investing. So again, if you haven't subscribed to our channel, make sure you hit the subscribe button so you get alerted to the future videos that are part of this topic that we'll be unpacking over the next little while. All the best in your retirement journey.